Top 5 Vanguard ETFs to buy and hold. When it comes to investing, there are many different types of funds that you can invest in. ETFs, or exchange-traded funds, have become increasingly popular because they offer a low-cost way for investors to diversify their portfolios and generate better returns than most traditional mutual funds. ETFs help investors to acquire a group of shares and other assets in a single fund with typically modest fees, and they move on a trading floor like stocks. ETFs have exploded in popularity during the previous decade, amassing billions in assets. In this video, we will talk about the top 5 Vanguard ETFs to buy and hold. So let's get started. Number 1. Vanguard S&P 500 ETF, VOO. The Vanguard S&P 500 ETF is a passively managed index fund that seeks to match the performance of U.S. stocks in general as measured by the Standard & Poor's 500 index. This index is one of the most popular investment funds in America, and for good reason. It tracks both large-cap stocks as well as small and medium-sized companies to give investors a glimpse into all walks of American business life. This index fund has been available since 1976 and now boasts over $180 billion in total assets. It's not only hugely successful, but also quite affordable with an expense ratio that hovers around 0.3%. The Vanguard S&P 500 ETF, with top holdings including mega-cap stocks such as Microsoft, Amazon, and Apple, has an expense ratio of just 0.03%, meaning investors pay less than $3 for every $1,000 they invest, making it one of the most cost-effective ways to get exposure to America's biggest companies while avoiding significant tracking error. Number 2. Vanguard Total World Stock, VTI. The Vanguard Total World Stock ETF is a cost-effective way to invest in both foreign and domestic stocks. With an expense ratio of just 0.08%, investors can maximize their return with the world's top-performing stock market index funds that will outperform 98% of all mutual funds over the next 10 years, according to Morningstar data on fund performance as quoted by Forbes magazine. In 1999, Vanguard introduced its first international stock index product, VT, Vanguard Total. While it is similar to this but covers more countries worldwide instead of just focusing only on American companies like many mutual funds do, it also has lower fees than most other foreign products since investors buy shares directly from them rather than through intermediaries who charge additional costs that are passed on to customers as high expense ratios or management fees. Number 3. Vanguard Total Bond Market ETF, BND. Comparable to number 2, Vanguard Total World Stock, VTI, is the Vanguard Total Bond Market ETF. It eliminates tax-exempt assets like those issued by state and local governments and cities, as well as unemployment bonds, Treasury wage growth securities, and is meant to highlight the performance of a people with age of exchange for payments bonds. This ETF offers a wide range of applications and is an important part of any asset class, including those with extreme objectives. Vanguard recommends the Vanguard Total Bond Market ETF as a buffer against share market risk, essentially as a balance to more volatility ETFs and products like number 2 Vanguard Total World Stock. Nevertheless, Vanguard Total Bond Market ETF is best suited to traders with medium to long time goals and a low risk profile. The asset allocation of the fund is to monitor the performance of a large company bond index, excludes wage growth and income bonds, provides extensive exposure to the addition to natural resources, United States currency bond market, offers a reasonably strong potential for interest income, share price fluctuates slightly, may be better suited to medium or long-term goals that require a consistent income stream. Number 4. Vanguard Growth ETF, VUG. The Vanguard Growth ETF holds over 250 equities from firms with strong growth prospects. Vanguard Growth has a higher risk profile than the number 2 and 1. High-growth enterprises, on the other hand, tend to have higher annualized rates than more established businesses. With over 250 equities in the fund, you may vary your investment while limiting risks. In particular, iPhone, Amazon, eBay, Android, and Google are among the largest equities in this ETF. While they are elevated businesses, They are also established businesses with a proven record, reducing your risk. Number 5. Vanguard Real Estate ETF, VNQ. The Vanguard Real Estate ETF follows the MSCI Marketplace Property Investment Index. This includes a basket of equities in the United States real estate industry. Real estate investment facilities, such as commercial buildings, industrial properties, and hotels, are frequently purchased and held by fund components across the United States. This ETF's geographic variety protects it from regional global factors, so it cannot do more about its sensitivity to risk premium, as recessions are terrible for the overall real estate market in the United States. VNQ is a good counterpoint to funds like VO and VV because its performance is not closely connected with larger fluctuations in U.S. equities beyond the real estate. The goal is to closely replicate the MSCI United States Alternative Investments Marketplace Real Estate Index's performance, offers a high level of capital gains and some growth potential, share value increases and falls more dramatically than that of dividend stocks. Perfect for assisting in the diversification of the risks associated with equities in a portfolio. On business hours, the market is characterized by the average here between bid and asking prices as of the New York Stock Exchange's midnight. Vanguard's image as a limited, investor-friendly investing institution is well-deserved, according to millions of delighted clients. However, both novice and experienced traders must be realistic about the hazards of investing with Vanguard. These dangers are not really specific to Vanguard. The danger of losing money when investing in economy assets is always present, and previous performance is never a perfect forecast of future results. Always invest in keeping with your appetite for risk and strategic goals, and seek advice from a registered money manager if you're unsure how to assess both of those. Well, that was it for today's video. If you enjoyed it, do leave a like and subscribe to the channel. Also, if you want to see more, press the bell icon so that you get VIP access to our future videos. Thanks for watching, and with that said, we look forward to seeing you in the next video.